What's up, risk managers? My name is Nasdaq Anonymous, and I'm addicted to the NQ. And boy, is she one hell of a drug. And welcome to today's NA meeting, where we'll discuss the economic data for the week, the day's technical analysis, the trading opportunities that we took on today's stream, and build a game plan for tomorrow's price action. And if you haven't done so already, you can show your support by subscribing to the channel. And with that said, let's jump into the charts now. This is tomorrow's data. Be mindful that all times are in Central Time. And we have a light block of news, so let's jump into it. At 7:30, we have news with the focus on continuous jobless claims, initial jobless claims, non-farm productivity for Q1, and unit labor costs for Q1. At 9 o'clock, we have factory orders month over month for March. At 9:30, we have some crude news. And at 10:30, we have the 4-week bill auction. Now, it's never recommended to trade during volatile price action, but if you choose to trade during these times, then understand you're playing a game of chance with your trading account. And now that we know what to expect, let's jump into the charts and create a game plan for tomorrow's price action. This is the block of price action that we traded during today's stream. And right at open, price traded in a range. And that is to be expected, because today we had a block of high volatile news, ending the day with Pump It Powell himself. And you can see why he got that nickname. But let's talk about what really happened today. As stated earlier, when price opened, price consolidated into a range until the market received the interest rate decision that was released at 1 p.m. Central Time. And as you can see, the markets used the stops that was resting above these highs as fuel to push this market going higher. But look what happened after Jerome Powell's speech. Price finally got sold off. And as we speak, price is still being sold off. And because I'm a betting man, I believe that price is going to continue to sell off overnight and into tomorrow's session. But as we stated in previous NA meetings, it was highly unlikely that Powell was going to cut rates. Fed Chair Jerome Powell made a lot of statements during his conference today. Let's look at those now. Here are the key takeaways from May 1st FOMC press conference. And all these statements were made by Fed Chair Jerome Powell. So let's go over them now. Inflation is too high and further progress is not assured. Inflation eased substantially over the past year, but it is still too high. Risks to achieving the dual goals have moved into better balance over the past year, but inflation has shown lack of progress. So far this year, inflation readings have not given them the greater confidence. It is likely that gaining greater confidence will take longer than previously expected. We do not expect it will be appropriate to cut rates until we have greater confidence inflation is back down to 2%. They believe that over time, policy is sufficiently restrictive to bring inflation back down to 2%. It is unlikely next policy move will be a hike. This statement is actually good news. He's assuring, at least for right now, that either the rates will be cut or they will remain the same, which is good. The signal we are taking is that it will take longer to get on a substantial path to 2% inflation. We do need to take a signal from these worse than expected inflation readings. His confidence in inflation moving back down is lower than before. This is bad. And finally, as inflation comes down to below 3%, the Fed's employment goal comes into focus. So these were the statements made by Fed Chair Jerome Powell. And based on the reactions on the chart, it appears that market participants are coming to terms that there will not be any rate cuts anytime soon. And with that said, let's jump back into the chart. Now, after the press conference, you can see that price just basically crashed down. And as I stated earlier, I believe that we're going to get a continuation going into tomorrow, because right above these lows are sell stops. And once price breaks below these lows, it's going to be the fuel to push the market down. And that's what I'm going to be looking for going into tomorrow. And with that said, let's jump into an ES chart. This is an ES chart. And this is the block of price action that we traded during today's stream. And just like the NQ, price traded into a range until the FOMC minutes. And as you can see, these sell stops or these buy stops resting above these highs was used as fuel to push the market higher. And right after the FOMC press conference, price was aggressively sold off. Now, during the FOMC minutes, we had a gamble party. And if you were able to catch that, we had fun gambling the FOMC meeting. And I will share this with you. I was up about 13 to 15K gambling FOMC. And I lost it all in that same moment. Over leveraging was the culprit. And that opened my eyes to the mistakes in everyday trading. It seems that when you over leverage, that's when you lose the most money. I mean, it's obvious. When you oversize, your winners can be big, but your losers are oftentimes big because the losses grow so big, it becomes hard to close the trade. And even though these were accounts that I specifically bought to gamble FOMC, seeing me lose 5, 2, 3K was definitely a blow. And something else that I picked up, I was in a position that I got out of too early. I was fearful just for price to not only hit my original target, but to even go further than my target. And because I was trading a 15 lot size, I was looking for a 15K win, a 20K win. And honestly, if I stayed in my position, I would have got that. And it showcases with my original style of just being in the position and allowing the position to play out. And I will say that having price come back to your break even is hard, because it says that not only did you not get out of the position, you're back to square one. And that's tough to get over. But with these bigger positions, catching these bigger moves, that's one of the key aspects that you have to accept if you want to stay in a good position, especially if you have a great entry. And as a trader, you want to be in when the market is moving. And that's why I advocate just getting into a position, trying to determine where the market is trying to go, and just stay in that original position, because I've found over time that scalps are taking multiple trades. Eventually the number game catches up to you. And if you're not willing to take that loss can overshadow your wins. Now, just like the NQ, I do believe that this market will continue to sell off overnight. And tomorrow, I believe that we're just going to get a slow bleed down. I do believe that the bulls will have victories here and there, but overall, I do believe the market sells off. And with that said, if you're enjoying these breakdowns and want insight on trading the Nasdaq and ES intraday, then subscribe to the channel and join our live stream where me and my trading partner provides intraday analysis in real time. Our current goal is building a community. And if you're tired of missing the best trades on the Nasdaq and ES intraday, then join the live stream, join the Discord, join the risk managers in the chat, and we appreciate your support as we grow. As we wrap up, remember the risk manager's creed. Trading involves risk and demands careful analysis and capital preservation. And we can do that by practicing sound risk management. Every trade tells a story. Make sure you write that story in your trading journal, because our psychology is all over these charts. And as always, my name is Nasdaq Anonymous, and I'm addicted to the NQ. Stay green out there. Peace.